Hello. Greetings from Menlo Park. I'm sorry I can't be with you today, but hopefully this is the next best thing. I'm just going to hide the little thumbnail of me from the top, so I'll go to the slides now. So I'm Tim Merel from Capital. We're an AR and VR advisor. So we produce reports and tools so folks can know in detail what's going on in the industry and where it's heading, so they can think about how they're planning and building their businesses. We've got a company network where we know pretty much most folks in the industry, usually CEO, corporate divisional head, or VC general partner level. And there we help basically put deals together, we help put folks together, we help build relationships. We do strategy consulting. That can be for large corporates entering the market or figuring out how to build their business. But also increasingly we get asked to be an independent board advisor for early stage startups to help them in terms of how they shape the business, how they build, and they're building the relationships, leveraging basically the assets that we've got to be able to grow faster. And lastly, we do investment banking, so it's buying and selling companies, and also doing detailed analysis of companies that investors are thinking about putting money into. My own background, I'm a software engineer, investment banker, lawyer, and founder, so I come at this from both the creative engineering side as well as the business side. Now, today we're going to talk about what's happening with mobile AR and computer vision venture capital, because the market's shifted quite fundamentally over the last 12 months in terms of how investors and where investors are thinking about. When we think about the AR and VR market, we don't really think in terms of pure platforms. We think more in terms of verticals. You know, we think about what are the sorts of use cases where actually AR or VR can be fundamental, can be critical to enabling something to happen which didn't happen before. So whether it be advertising and marketing, games, navigation, social, we think about the verticals on top of the horizontals. So we think about the platforms, whether it be smart glasses or mobile AR, VR, and so on. But it's really those verticals that we think about. Now, the companies that you see here are the leaders in the space. They're the companies in each of the verticals that have raised money. They range from very early stage startups that might have done a seed or an accelerator round through to companies that have raised hundreds or in some cases billions of dollars. So it's really the full gamut of everybody who's raised money in the space. When you look at the investment that's happened over the last few years, you'll see there's been sort of a steady upward tick across the space. But when you look in those verticals, you've seen it's been quite chunky. You know, there's been some very large investments into the core tech space, into smart glasses, games, and so on. But if you look back at the last year, there was over $3 billion invested into AR and VR in the last 12 months. And over $1.5 billion of that was invested in the last 3 months alone. Now, those big dollar amounts are actually dominated by very large deals. So it's been kind of lumpy, as you can see from this. So what that doesn't give you a feel for is the diversity of really small early stage deals, how that's been playing out. So to understand that, you really need to look at the detail. Now this is a summary that we just published our augmented and virtual reality report last week, so all the details sitting in there. But here you can see the diversity of investments, particularly early stage investments, by looking at the sheer volume. And you see it's all over the map. There's all sorts of different verticals which have raised cash. What you can also see is if you look at last year, in the middle of the year, there was a dip when VCs broadly cooled on VR and started to think more about mobile AR and already more into computer vision with the rise of ARKit and ARCore. It started to change the perception as to what was possible in the market. And we fundamentally changed our market thesis analysis, all the forecasts we do on revenue. We fundamentally changed all of that when ARKit and ARCore came around because they changed a whole range of things. But what you see is that in the last quarter, so in the last 3 months, deal volume has started to go back up. Now, what we don't know is what's going to happen in the next 12 months. It's very hard to predict these things. So the next 12 months will be very important from a venture capital perspective and from a startup perspective across all these verticals. Now, when we look at the VCs themselves into the verticals, what you see is there are even more VCs than there are startups. Now, that's not unusual. You know, in most investment rounds, there are a range of different VCs who will participate. But when you look at the sheer volume of VCs and the diversity of VCs who come into the space, with the shift really more towards mobile AR and computer vision in their thinking. We wanted to get a better understanding as to what was driving them, where they were now. And so we spoke to some friends. We spoke to around 30 leading VCs in Sand Hill Road, China, and elsewhere, to really understand right now what's going on in their heads. What are they thinking about? What are they looking for? What are they not looking for? How are they approaching the market? Again, the detail of all the interviews and everything else is in the report, but I'm going to give you some of the highlights now. Mobile AR and computer vision and machine learning are very much at opposite ends of the spectrum in terms of how VCs thinking about it and how they are in practice. Mobile AR is delivering new UX and new UI. Now, the poster child for this is a Pokemon Go, even though it was when it first came out, a very basic form of mobile AR. But there are some fundamental challenges and problems to sort out. So if you think about simply holding a phone in front of your face, is something that you don't tend to do for very long periods of time vertically, because A, it's just not something you tend to do generally, but B, your arm's going to get tired after a while. So that tends to make you think, okay, maybe we need short session apps to deal with the physiology of that. So a whole range of challenges there to figure out, but a whole bunch of opportunities. So last week I was talking with a company based in Paris, and they're basically an enterprise collaboration company basically using an iPhone X, iPhone 10. And I've seen a lot of stuff in the space, as I'm sure everybody in the room has, but I was completely blown away because I saw a new form of remote collaboration I'd simply never seen before. And so we're seeing a bit of a Cambrian explosion of new UX, new UI, totally new ways of doing things. At the opposite end of the spectrum, you've got computer vision and machine learning. And they're powering a very broad range of new applications. So it's not just mobile AR, it's autonomous cars, it's robotics, and so on. And so the way that a lot of VCs are thinking about this sort of spectrum is as mobile AR as a way for some of the smarts, some of the intelligence, some of the new capabilities coming out of computer vision and machine learning, being able to express themselves at a mass scale. There's a broad range. Next, and this is kind of obvious, mobile AR is very early stage. It's a few months old. And so a lot of folks have been getting terribly excited about the market, which is right. You're right to be excited about it, but it's still really early. We're at the earliest, really the first steps of what this market could become. So folks have been talking about last year as being the year of AR and VR, and this year is the year of AR and VR. We think that sort of talk is probably a little bit premature. It's coming. It's definitely coming, but it's early. So from a VC perspective, what VCs are thinking about is exits in the $50 to $100 million range in the next 18 to 24 months. As you start to get some successes, you start to get some traction, but that sort of scale. And the reason is that dominant companies take time to emerge. So to evolve from being a chimp to being a half man, half chimp, to being a man, to being a giant killer robot, that takes time. It doesn't happen overnight. So I think the watchword for VCs is patience. Don't expect giants to necessarily emerge this year. Even if you think about the scale of mobile AR this year, it's still got a ways to go. So while we're on the theme of giant robots, computer vision and machine learning is further into the cycle. We're a few years in now with this current cycle in that space. And you're starting to see practical, very disruptive technologies begin to come to market in a range of spaces. So how VCs are thinking about this and what excites them is a new generation of tech giants, so the next leaders in the market, could emerge in the next 3 to 5 years. Some fundamentally huge companies that will dominate are in the process of emerging, and that's an extremely exciting opportunity for VCs, particularly later stage VCs. Again, mobile AR is going to take time, and there are really a couple of aspects to this. The first is from developers' perspective. Learning what works and what doesn't work is not necessarily something that's completely straightforward. You don't necessarily know what's going to happen. You don't know what's going to hit. You don't know what's going to not hit. So there's a whole bunch of experience that needs to be picked up around the applications, around the UX and UI, around the fundamentals as to what people are going to use mobile AR for. So far we've seen some interesting games, a lot of demos with a lot of possibilities. But there's just an experience curve which developers need to go up because it's such a new market. The second side of this is the consumer enterprise adoption. Now, ARKit, AR Core, Facebook camera effects, what Snapchat's doing and so on, and QR in China with Tencent, they're going to hit 900 million installed base by the end of this year, which is a big number. But it doesn't necessarily mean that consumers and enterprises are going to be using a huge range of applications this year. They will, but it's going to take time. So our view is that the revenue for the market in mobile AR is probably not going to actually take off this year. We think it's probably going to be next year. From a consumer perspective, those breakout apps have to develop. Pokemon Go had a very specific set of circumstances. There are going to be breakout apps here, but they will take time. From an enterprise perspective, if you think about the skill sets within corporate IT departments, here you're talking about technologies which are closer to 3D games than they are to what a general enterprise corporate IT department would be dealing with. So that's going to take some time. What VCs are looking for is for startups to dominate a vertical first and then turn that into a horizontal platform play. In other words, they don't expect you to own the whole market right now. Even think about Facebook. They started by dominating the college vertical, and then they spread out from there. So find a space where you can utterly dominate, show that you can get traction, show that you can actually make some money, and once you've done that, then go horizontally. What that means is, even though VCs will tell you happily that they're always looking for platforms, and VCs love a platform, they know that starting off as a horizontal platform that owns everything is not impossible, but it's not easy. So if you're telling them that you're a mobile AR platform today, they might not laugh at you in the room, but they're probably laughing when you leave. So be a little bit careful about how you play that game. Now, if you're not a fan of South Park, this image will make no sense to you. If you are, you'll know what I'm talking about. VCs are interested in native mobile AR. So if you look at the apps on the App Store today, there's a bunch of good stuff there, nothing wrong with it. But a lot of the apps are ports from other platforms, whether they be VR or games or whatever else it might be. And that's a great starting point. But they're not things which you could do only using mobile AR. In other words, if you're thinking about what VCs are looking for, they're looking for you to leverage what's unique, what's special about mobile AR, to be able to do something which you couldn't do in any other way, that wouldn't make sense in any other way. Because the truly disruptive applications, the breakout applications, that's where folks are hoping they will come from. In the computer vision and machine learning space, VCs are looking for startups that have real-world solutions to fundamentally disrupt industries rather than research projects. My favorite example comes from Jenny Lee from GGV Capital, who's been running their China practice for more than a decade out of Shanghai. And in China, there are many different types of mushrooms, and many of those mushrooms will poison you. So the teams that need to select, pick, sort, and distribute those mushrooms need, in general, 10 to 20 years experience to make sure that they don't poison you. There's a startup in China that Jenny likes, where they've got a nice computer vision model. They spent 6 months training it on every different type of mushroom in every different angle and every different condition in terms of from being pristine to being decayed. So the computer vision model was extremely accurate when it came to picking mushrooms. They then used mobile AR as an interface, and now they've got workers with 2 weeks experience who can do the same job. The next extension of that is to incorporate that model into a robot so that you take the people out of the industry entirely. So here you're seeing an industry that is thousands of years old, that's never seen any technology disruption, being fundamentally changed using computer vision and machine learning. So this is still very much seen as frontier technology. And so with frontier technology, you're looking for really proper disruption, not just marginal improvement. So in this space, it is about fundamentally disrupting things. VCs are investing in over 20 mobile AR and computer vision and machine learning sectors, but they're not the same VCs. So that chart I showed you before with all the different VCs, there is some overlap. There are some folks where they are specialist funds in the space and they will invest in multiple sectors. But a generalist tech VC, where they're looking at the market as tech rather than they're an AR or VR specialist, they might make 1 or 2 bets in this space. So I know it sounds obvious, but don't spam them if you're a startup. You need to research them, understand them as individuals, understand their portfolios, understand where you might fit in, and then start thinking about approaching them. It's really important to, VCs sound in some ways like, lovely people, very bright, who have large pots of cash, but they're all, at the end of the day, human beings. They're all individuals. They all think differently. So you've got to approach them in that way. But lastly, investors themselves could actually pose a risk with the potential for overfunding, particularly in the early stages of mobile AR. Now, the other startup founders in the room will know that not having enough money to be able to pay your people and for premises and marketing and advertising and everything else for your startup, that can be deadly. But having too much money at too high a valuation can be quite dangerous, because if you don't act like a cockroach, if you take in too much, if you become too big too quickly, then when it comes to the next round, when it comes to what happens next, to the expectations, it's quite dangerous. So again, what I'd counsel you is to speak to folks who know, speak to folks who've done it before, get folks involved on your board who actually can help guide you, so that you play this game intelligently in the same way that you do with the technology itself. So that's the formal bit of the presentation. And if there's time and if there are microphones in the room, I'm happy to take one or two questions.
Yeah.
Thank you.